Good day, everyone, and welcome back to QuestForAlpha. This is my weekly update where I document what actually happened in the market and not what should have happened. No hype, no prediction, no hindsight perfection, just execution, risk management, and results. I approach trading the same way I approach engineering. Define the system, apply the filters, manage the risk, and let the probabilities do their work over time. In this update, what I'd like to do is walk you through the trades I took, the ones I skipped, and how risk was managed, and how the portfolio is behaving as a whole. Quick note before we start, because of the holidays and some travel coming up, I may not be able to publish a weekly update for the next couple of weeks. So the next update is going to likely be around January 10th. Before we begin, this isn't a financial advice. It's a transparent record of my process. So let's get into it. What we have here is our watch list, active trades, trades that achieved the first target, which is 2-1, previous close trades, some short-term setups, and long-term setups. You can pause and take a look at all of the different stocks that are being monitored. So let's take a look at Dover. Dover had a pretty strong week. At this moment, it is in profit. Vertex had a nice week. It pulled back, and then towards the end of the week, it started to reach for higher prices. So that one is doing well. Next one on the list is APO. APO was an interesting one. It had a consolidation here. It broke above. I did not want to put a stop loss this great. So instead, I was thinking of putting it right below this candle, which came above the consolidation. And then after that, we see that the three consecutive candles took out the previous high over here. With that, this would be a, well, actually it did reach the target, I'd say. Let's see, 194, well, barely reached the target. So we'll consider it still an active trade. LEN is below our stop loss, but remember, I usually take a look at flexible stop losses. So for the time being, it seems like the price is consolidating. If the price decides to go below and close somewhere below this region, I will exit. For the time being, I'm hoping that this is going to reverse. Corteva, it is in the negative right now, but has not reached our stop loss. This is an active trade. FCNCA, it's in profit, which is it's doing pretty well so far. CNA was a trade that we had entered over here. It had a huge drop, but we never really exited. And the reason why we didn't exit was because we were expecting, because of this very strong candle, that unless the next day was going to close somewhere here below this previous low, then we were going to exit. In this case, the price, you can see a strong wick and then rebound. So right now we are very close to break even. So this is something we're still actively following. Maple Bear, CART, is in profit. Consolidation here, a clear break above this previous high. We did not enter back then. We can see that the price continued to range and then it went above over here. If we follow this trend, this trade, this is something that we can consider as a stop loss, or we can go maybe over here. We're still in the negative. We can aim for a 2-1, and this happens to be an active trade. ALSN, this is not something we looked at last week. It was a part of our watch list, but it was on the long-term setups, and some of these formed even though we didn't review them. I looked at them after I published the video, and as we can see here, this is one that did very well. There was a nice consolidation, breakout, and closure right above that consolidation. If you had entered at the end of the day, then this is trending pretty well, very close to the 221 target. CPay, there was a nice consolidation, a break above the consolidation and above the 200 EMA. If you had entered at that point or on the very next day, which would have been a lot more attractive, you're already in some profit. Ingersoll Rand is another one that was activated last week. You can see that this was the consolidation, a breakout above it, a closure above the 200 EMA. Pretty strong move. Now, this is in the negative right now, but we shall see in the following weeks how it behaves. PR is another one that was on the long-term watch list. It is not something I personally entered, I'll be honest, but it was on our watch list. It did set up pretty nicely, so we are going to continue to monitor this one. This would have been the perfect place to enter. Why? Because there was a nice consolidation. The following day, the price had a bullish candle that closed above that consolidation. It's above the 200 EMA, and it's in profit. And then IoT was a stock that had a decent consolidation here, strong candle right over here. That one closed above the 200 EMA, above this consolidation. And then if you can choose where to put the stop loss. In this case, shows to be over here. Now, someone would have been a little more aggressive. They could have used this. And in that case, you would have already achieved your 221. We are going to be a little more conservative. And right now we're going to say that that was not achieved. And therefore, we can consider either adding more. And if you miss that, then this is probably an opportunity to get back into this stock because it's very close to break even. So what achieved first target was a Prudential Financial. This is one that we did not look at last week, but it was on the long-term watch list. There was a really nice consolidation the previous week, and then a strong candle that went above the consolidation. If you would have put the stop loss here, then you would have already reached a 2-to-1 risk to reward, and the price is trading even higher now. The rest, we've already looked at those. Those are Waters Corporation, Merck, and Regeneron. Previously closed trades. So this was a major loss. This is one that I had entered last week on this candle, actually 2 weeks ago on this candle. And then you can see this week it actually collapsed. The price collapsed significantly. The reason why I got out of it was because I was hoping that this price, this level here will hold. Instead, what happened on the following day, the price dropped and closed below this level as well, and the price will just bounce off and come to this break even is a huge assumption right now. So it is a significant loss. I think it's around 2.7 R loss, but it is what it is. We follow the system and we let the probabilities do the work over time. And these are some of the previous losses that we've had. Everything that's marked with this orange line is where I would have exited. Few short-term setups to watch for next week. CRM You can see there is a consolidation forming right over here. If the price closes somewhere above, then this is an opportunity to take it. TDY, similar to CRM, a consolidation formed right over here. If the price closes above it, this is something you could take. TRU, similar. This is a consolidation. If the price closes above, that's something that can be considered is a play. ACGL, I don't know about this one. I'm just monitoring it. I'm not certain what I would do here just yet. And then we have Visa. Similarly, no consolidation here. Maybe if there is a consolidation being formed, we can take a look at it, but nothing right now, nothing immediate. RMD. RMD is an interesting one. If we take a look at this consolidation and we assume that the price, well, we see that the price is going to close above it, then that's something we can consider investing in. Now, these here were a good setup. However, there was a huge gap over here. I would not consider taking this type of stop loss. So this to me is huge. So had the price closed somewhere over here, then yes, I would have been interested. In this case, no. Now, what generally happens is price can come down to fill this gap. And at that point, if that actually happens, then I would probably be interested in participating in. So instead of moving it from the long-term watch list, why don't we just add an alert here and watch for the price to come back? RGA, similarly here, there was a very strong candle here. I did not want to enter because I wanted this peak to be taken out, which it did. But now what we end up with is a huge stop loss. And I don't feel comfortable putting this stop loss below this candle over here. It may make sense, but if that made sense, then I would have probably considered entering here. And because I was waiting for this previous peak to be taken out, I would say I'm pretty late to this trade. And maybe that's unfortunate, but for the time being, this will go into a long-term setup. And that's not something I would look into. TXRH, nothing really here. This would go in the long-term setup. From the long-term setup onto, I marked them as red. Why? Because I think the price already left. There was really no good play here. No consolidation that I would have considered decent enough. If you consider this as a consolidation, then what about this price action here? Then if you're waiting for the price to take out a previous peak, then you have a huge stop loss. So for me, this is a signal to remove it from the watch list. RBRK, similar. I don't know what's going on here. There was a small consolidation here, but this was too far. The consolidation would have been nicer to be somewhere here closer to the 200 EMA. I don't really like the price action, so this will be removed. So as you can see, a lot of great movement. What I would like to do right now, I'd like to go to the Excel spreadsheet and tell you how the portfolio is behaving as a whole. So I have two tables, and you can take a look at the previous week Excel spreadsheet and the way it looked like. And I made some modification because it'll be a very nice way of us monitoring the progress. So the first table, these are all the active trades. This assumes that we're not cashing in. So if a target reaches 221, we're not exiting. We are leaving it. So what that means is remove trades or stocks from this table only if they hit a flexible stop loss. So if they take you out, kind of like what happened with AZO, where we reached a minus 2.8. Or if they reach a 2-to-1 risk to reward, but then the price reverses to the break-even point. So in that case, you can count it as a break-even trade. So you'll apply 0 points. Right now, as you can see, the list from last week, we were at minus 2.1. If you look at all the trades that are going on right now, active trades, we are at 8.85. So that's a pretty big difference. So it was a pretty strong week. Now, to be genuine and honest with all of you, the reason why this is 8.85 is because I did add some of the trades that had reached 2-to-1 already, but that they are still considered to be active trades. And these just happen to be right over here. So the ones that achieve the first target. We can take a look at in the following weeks where if we should consider them as trades where if they have reached a 2-to-1, we would take 50% of the profit. And perhaps that is a smart thing to do because we don't want the target to reach a 4-to-1, then come to break even, and then we consider that a net zero profit after spending so much money and so much time being invested in some of these stocks. So right now, what this is reading is that Prudential is giving us a 2.6 risk to reward, 1.7, 1.6, and 1.2 for the rest. WIT, MRK, and REGN. So why don't we do that? Even with that, we're at like 5.28 for the week. And then we can just make an update here. If they reach first target, remove 50%, i.e. cash in. And let the rest go. If we take a look at the realized profit losses, exit trades, so if we look at it from a different perspective, where if the target was reached at 2.1 and you are very strict with that rule, you get out, or if it reaches your flexible stop loss, in the case AZO reached and that ended up with a minus 2.8, then what we can do is we can monitor that progress over here as well. So for last week, that was around a 3 risk to reward, and for this week, we are already at 4.2. So a pretty good week so far, right before the holidays. It just shows you that the strategy is doing pretty well, I would say. As long as you're consistent and you follow the steps, you identify the 2 filters, always invest in an uptrend, and then wait for a pullback to a nice demand zone on the monthly time frame, and then utilize a confirmation which happens to be on the lower time frame, which is on the daily time frame. So that's the week. Some trades worked, some did not, and that's exactly how a probabilistic system is supposed to behave. What matters isn't any single trade, but whether the rules were followed and risk was controlled. Over time, you see consistency beats intensity. As mentioned earlier, I'll be taking a short break over the holidays, and because I'll be traveling, the next weekly update should be around January 10th. With that, thank you all for your attention. I wish you luck on the markets, and I wish you happy holidays. Bye-bye.